Well, economists here expect the prices of goods and services in Singapore to rise. But they say a tightening in monetary policy could slow or curtail the pace of increase. That's what at least 10 financial houses that CNA spoke to expect the Monetary Authority of Singapore to do soon. And they point to geopolitical shocks and inflationary pressures as the reason. Brennan Tanoto with more.
Singapore's overall inflation rose to 4.3% in February. This was up slightly from the 4% in January. And for consumers, the effects are already being felt with higher grocery bills. So now a tray of 30 of these eggs costs $7.20 compared to $6.15 last month. That's about a 17% increase. Now the reasons for the rise in prices are often due to factors such as labour shortages as well as higher freight and energy costs.
It's a case of you are not the only one looking for eggs. So the rest of the world looking for eggs as well. The cost of bringing the eggs is not like pre-pandemic. The transportation cost has gone up because it costs more to fill up that tank, the diesel tank, or to fill up the ship that brings it here or the planes that fly here.
Still, prices are expected to climb further. Demand here is rebounding as the economy reopens.
Reopening of the economy and the return of some of the tourists, demand for labour will likely increase. And also note that there is also a series of increases in wages this year, such as the progressive wage model being extended to the retail sector in September. So overall, that would raise wage costs for businesses, and that will probably have to be passed on to consumers as well.
And so a tightening in monetary policy will translate into a stronger Singapore dollar. This is expected to bring cost of imported products down. Still, there is a trade-off, but it's one economists say Singapore will be able to manage.
For importers, it would mean that when they import products from overseas, it will be cheaper. But for exporters, that's not good news because essentially it means that they will be less competitive when they want to export to overseas, resulting in a slowdown in terms of growth momentum. So this is essentially the trade-off. And I do not see it being a major issue because the economy has recovered quite strongly from the pandemic. The growth momentum remains fairly robust.
Economists say Singapore's full-year growth for this year will still come in within the official forecast range of 3 to 5%. But they expect overall inflation to hover at around 4% at least until the second half of the year.